Good morning, boys and girls. In the US, it is 8:20 a.m. Eastern Time and 2:20 p.m. European Time. So let's start before the news. Today it is Wednesday and we will have some news from the housing market today. Building permits in about 10 minutes and as well crude oil inventories like every Wednesday. So, from the housing market, these numbers will be interesting if there is a cool down because of the high interest rate levels or not. Yesterday we already have seen numbers from retail sales which were lower than expected, so more signs of a cool down of economy here. You see core retail sales were in line with expectations, but retail sales monthly numbers were lower than expected, as well as the yearly number. So there was a big discrepancy, as you can see. 4.2% was the expectation. We only had 1.6% here. So more numbers showing a slowdown of economy, as well as New York Empire State Manufacturing Index on Monday. We had the negative 31.8 and the expected number was only minus 3.7. So it will be interesting where the stock market will go in the next trading days, because right now we still see a high amount of money flowing into Nasdaq technology stocks. We made new highs yesterday. We had a high point of 13,554 points. So we are still at 13,500 level, round psychological level, but you see the strengths of Nasdaq here, especially if you compare it to other index like ES Future here with S&P 500. So here you see consecutive days with lower highs and just forming something like this here. So soon we will see a breakout to the up or downside, and yeah, it will be interesting which direction the stock market will take here, but you can clearly see, so it's just 1 or 2 days left and then we have to decide if we will break to the up or downside here. So what else is interesting? Of course, CME FedWatch tool, next meeting is in 28 days and we see a shift back to higher expected interest rates. So now we already have 21% for another 25 basis points rate hike. So everyone was telling us, oh, it's over, we are at the peak. No, only 79% are expecting that we will stay there at 5.25% interest rate level, but 21% are expecting a rate hike of 25 basis points. And if we look at the probabilities ending the year 2023, now here at 4.75%, so just half a percentage point lower than the current interest rate level. So you see the big shift to higher interest rate levels, and this is the reason why the bonds are dropping right now, because there is a higher expected interest rate level during the next months and yeah, into 2024. But you still see the expectancies here, so we will probably end the next year at lower interest rate levels. So 3.25% is the expected level for November 2024. But yeah, you have seen that the expectancies can shift pretty fast here. Okay, let's go and see some other interesting things like gold, for example. Gold is dropping right now. So we have a first sign here that there is less fear from the banking sector, but an early indicator that the stock market as well will maybe be a little bit weaker. Why is gold dropping? If we look at the US dollar, or especially the Euro US dollar pair, there we see why. Because the US dollar is strong right now, Euro is weak. So we see this drop here. We were talking about this in the previous live streams, and here you clearly see today the break below the previous low points. Here we broke below the previous low points. So we are making lower highs, lower lows, and therefore we have a stronger US dollar, which is indicating an early fear in the market, inflow into US dollar cash, and therefore gold is more expensive in a foreign currency, and therefore it is dropping right now. So it will be interesting to see if gold can find a support here around the $1,980 level, which was previous support as well. We are right at the Fibonacci level, as you can see, 38.2% Fibonacci level right now. So we should soon find a support level here, but we still have room to go back to the 50% Fibonacci retracement here in the 1960 area. Then natural gas still rising a little bit, but made a nice doji yesterday here in the $2 and what was the high point? $2.47. So maybe we'll go back a little bit to the 230, 225 area here and then move further on, because we are now making higher highs and higher lows. Yeah, the previous low point was $2.03. So let's see if this was the real low point, or if we will retest this level again. Crude oil. So crude oil was bouncing back here from the previous low point, and as well the 50% Fibonacci went back to $69.41 and is just going sideways right now. But the more the economy will cool down and the stock market will drop, the more crude oil should drop as well. So let's see if OPEC can force a breakout to the upside here, if they will cut supply, but else I will just expect the crude oil prices to go sideways here. Then we have our wicks. The fear is rising a little bit. You can see over the past 4 consecutive trading days, fear is rising. It's just a slow move here, but we are back at the 18 level right now, 17.66 right now. But yeah, you can see how fast the fear can rise, like we have seen here in the first week of May. So if there is some bad news of debt ceiling, then probably will soon rise above 20. And if these problems are solved, then we can drop back to the 15.5 or even lower. So it will be interesting, because a lot of small traders are short right now. So we can even have a short squeeze in the market. A lot of people are betting here with long calls on wicks, and therefore this keeps the wicks at low levels right now, if people are betting with long calls right now. Yes, then we have some more interesting thing. I have the high yield bond market here with the HYG, and there you see it's dropping big yesterday. And this is also an early indicator for the market overall. So if there are higher yields for the corporate bonds, then probably we will soon see a weaker economy here. And you see this break below the previous low point. This is never a really good sign right now. And then let's move on to our market news for today and prepare for these. From the housing market, building permits and housing starts. So the expected number is 1.4 million for the building permits, almost the same like in the previous months. Housing starts almost the same like in the previous months, 1.4 billion. So 1,400,000,000. Let's see if that comes in line with the expectations, or if it is higher than expected. And what will it have as effect on the market? So for Nasdaq, the important level is the high point from yesterday, 13,554 points. The lower level would be here, the 9 EMA and the 20 EMA level. So the 9 EMA level, if I zoom in a little bit, then we can see it a little bit better. So I will just draw another line here. This one here is 13,400 points, and the 20 EMA level sitting here about 13,300 points. So these are, I can delete this one. So yes. Okay, so you can remember it really easily, because it's just a round number. 13,400 and 13,300 are the exponential moving averages, 9 EMA and 20 EMA on a daily basis. And you can also see that this was a previous high point, so probably we will find a support within this area. And yesterday we had interesting levels there as well. So yesterday we made this sell-off when the market opened, and we ended here at 13,450 points. So this one could also be an interesting level as a low point here, as well as the low point here pre-market, 13,426 points. So let's see the numbers. And building permits were lower than expected, and housing starts almost in line. Yeah, almost in line here, no big change. Housing starts 2.2% growth, and the building permits minus 1.5%. Okay, it's okay. It's not too bad, but it's not too good. But the building permits lower than expected is what the Federal Reserve wants to see and what I want to see. Because if we get into a recession, then this number will probably drop even more. The same for the housing starts. So let's see the reaction of the market. Is there any reaction? No big change, just a little bit of sell-off. 10 points here in Nasdaq. What do we see in the ES future on a 1 minute time frame? As well as some sell-off here, but just a few points. No big move. So we will have to wait for the market to find its direction at market open in about 1 hour. Okay, so let's move on with some commodities here. For example, sugar is still at its high point, just going sideways. A small sell-off in the previous 2 trading days, but really strong right now, still staying at its high point. So it will be interesting as soon as we leave this sideways trading phase here between these 2 levels. And then you can trade a breakout to the upside or to the downside, and there will probably be more volume for sugar. As well for orange juice, which is really interesting right now, because here you can see we are going back to the breakout level. We talked about this. We had 2 really bad sell-off days where we reached the limit down level, and then we are trying to go back to the breakout level, to the 260 cents area. And there I would enter new shorts again. Orange juice is still high priced. There are some issues with the current supply here. So it will be probably 5% lower than in the previous year, 2022. So let's see if the market will really drop from this level. But on a technical side here, I would go short here at the 260 area as soon as we reach this level there. Then for wheat, still waiting for a decision to be made in, where is my chart? Wheat. Don't I have open any wheat chart here? Okay, I don't have open any, so let's open it. It's July future. Still waiting for a decision to be made between Ukraine and Russia for the export. And yeah, you see we had a big rise here the day before yesterday, back to the 663 cents area. But yesterday we dropped again, and today there's more dropping. So no big sign of a pushback above the previous highs. Still waiting here, but an interesting pattern as well, because you see the same like with S&P. So we soon have to decide if we will break out to the up or downside here as well. Then still watching Nvidia as an AI stock. Just a few bucks left to reach the $300 level. It will be really interesting where we will close this week. So finally we made it above the $290 level. But I'm still not expecting to break the 300 level and go above it, even if Nasdaq stocks are really strong at the moment. The broad market is selling off, especially if you look at the Russell 2000. So let's look at the Russell. IWM is an ETF for the Russell 2000. And there you can see that this market is really weak in the previous weeks. So you see lower highs and if we go on a daily time frame, you will see it as well. Just sideways trading. No real strength here in this market, and we see the same pattern in S&P 500. But we also see some leading stocks like Nvidia here. And as soon as these big tech stocks will see some signs of weakness, especially for Google and Apple, which are also leading the index right now. Let's see Google, which had good news in the previous week with their AI Bard. So now we see this big rise here. This was a 11% move in just the trading week. So yeah, as soon as there's some more weakness in these big tech stocks, then the market will probably come down. But we have to wait for some bad news or a turn of the market overall. And there you have to be cautious and you have to be patient and wait for the right moment. Because right now we just see some smaller signs, but no real reversal right now. But if we look at TLT ETF, there we see the bonds, and you can clearly see lower highs as well. So dropping bonds and a rising stock market means nothing good here. So probably soon the stock market should turn to the downside as well, but we have to be patient to wait for this moment to come, because there still can be a short squeeze, because a lot of small retail traders are short at the moment, and most of the times the small traders are not on the right side, and therefore they probably have to be squeezed out of the market, and then the market can drop really hard. So maybe it will take 1 or 2 more weeks until we will see the market dropping. Okay, what else is interesting in the next days? Let's see our calendar again. So for the next days, we will have tomorrow Philadelphia Fed Manufacturing Index, initial jobless claims, and existing home sales. So yeah, I will try to live stream this as well, because it will probably move the market, especially with initial jobless claims. This will be important because the Federal Reserve has an eye on this number. Then Jerome Powell is speaking on Friday at 5 p.m. my time, which is 11 a.m. Eastern time. So this one will also be interesting. Everyone will have a look at what Jerome Powell is saying, and yeah, so this will probably move the market as well. For next week, let's have a look on the next week. All the 3-star events, service PMI, new home sales on Tuesday can move the market, and on Thursday, GDP, this will be an important number, and pending home sales. Yeah, from the housing market, PCE price index will be important on Friday next week. So this one will be really interesting. More inflation number here, and this is also a number the Federal Reserve is looking at. So if you have some more interesting stocks, just let me know, then I can bring up the chart and we can discuss it. For now, I have no more interesting things right now. Just let me know if you have some more you want me to analyze. Yes, I have here for copper. So if we look at the copper futures, which is also a leading indicator for the economy, you see that this one is dropping since April. So there we had a high point of 4,180, and now it is dropping. As you can see, we are back below the 3,000 level. And yeah, it's green today, but you can see that yesterday we went below the previous low points. And this is never a good sign for the stock market, because if there are lower prices for copper, then soon we will see slower growth in the economy or even a recession, and therefore this should turn on to the stock market. So it will be interesting to watch what the copper prices will do, but for now we see a lot of lower highs and lower lows, as well as we have already seen in euro US dollar, because there as well this is a leading indicator of the fear. So if the money is flowing back into US dollar cash as safe haven, this is what we currently see, because again the euro is 0.4% stronger than yesterday against the US dollar is 0.4% stronger against the euro compared to yesterday, and therefore this is one more sign for an incoming weakness of the stock market. But it will take time. Maybe we will need 1 or 2 more weeks for a squeeze out of all the small early short traders, and this can happen pretty fast. So be cautious in the next trading days, especially because we will probably soon see our highs, but it's not said that the current highs are the highs overall. So be prepared that we can also rise further here, maybe 2 or 3% more to the upside before we see a downturn in the stock market. Okay, thank you for watching so far. Let's meet tomorrow again. Therefore, please give me a like for this stream and subscribe to my channel. Then we can meet tomorrow pre-market again for the economic news. Thank you for watching. See you tomorrow. Have a nice trading day. Goodbye.